I get a ton of calls, comments, questions about just understanding business taxes. So I took a compilation of all of those questions and kind of put it into a video for you. LLC versus S-Corp, W-2 versus 1099, estimated taxes versus employment taxes. Let's dive in. And don't forget to like, comment, and subscribe. Your tax BFF will talk to you soon. I keep getting the same questions over and over and over, and I'm getting a lot of questions about business taxes, S-Corp elections, all of that stuff. So I got a quick minute before my next appointment, and I definitely, we gotta do this. It just gotta happen. So I'm glad y'all are here. Let's jump into it. I'll be posting it on my page if you can't stick around, but understanding business taxes. Let's start with the basics. LLC versus a corporation. This is something that is driving some of you insane. You're going crazy. You're like, I keep seeing it. I'm getting misinformation. I have looked on your page. You're saying a lot of stuff that's speaking to me, but I still don't know what to do. An LLC is an asset protection vehicle, period. Okay, an LLC does not have any tax implications one way or the other. So if you're a sole proprietor or you own an LLC, you the same. The IRS is looking for some taxes because you ain't paid any taxes on the money that you made. And every dollar that you do not deduct is taxable income, and you will be paying some employment taxes on it, which is your self-employment tax. Okay? End of discussion about the LLC. The S-Corp is a pass-through entity. The IRS is allowing you to act as a corporation and be a shareholder of your own business. You're saying to the IRS that I made all of this money, but not all of it was employee taxable. You're saying that I generated this revenue, but I'm only paying employment taxes on the amount that I actually took home. Huge benefit. 15.3% of a benefit to you. So there is some immediate tax savings with most people who elect to be treated like an S-Corp. But you first need to understand that these business entities are totally different. LLCs is going right on your Schedule C on the normal 1040 that you've been filing forever. So you will not have a separate business form to fill out. Schedule C is just among all of the rest of the schedules and documents that are on your 1040. Okay? S-Corps, you have to file corporate tax returns. Corporate tax returns are due March 15th. March 15th. You do not want to miss this deadline. And we'll talk about this a little bit more in a little bit, but the number one thing in understanding business taxes is not missing deadlines. So, you're S-Corp and you're trying to save money and you're trying to figure out what loopholes to make sure that you're not spending so much in taxes, and you don't want to pay employment taxes on everything that you earn. And I empathize with you, but you have to understand what comes with that. Before I talk about net income and all of that good stuff, I always ask someone if they're ready. Are you ready? Are you organized enough? Are you ready to start filing quarterly instead of getting all your documents together and scrambling annually? If the answer is, I ain't really ready, or I'm going to try to be, or I hope I can be, or that's my New Year's resolution, I would not elect that S-Corp status just yet. The amount of penalties and fees that you can get just for not filing properly and not being in compliance with this election can take you out the game. Okay? Now, March 15th is also the deadline to have your S-Corp election application in. But before you fret and think that you have to make this decision in the, right now, if you want to be an S-Corp or not, you can still file an S-Corp election with your S-Corp return when you're ready. Okay, so that means that if you miss this deadline, we can, say that you want to take this election for the beginning of 2022, even though you missed that deadline, or even 21, if those penalties and fees are not as great as the savings, and we just attach it to your corporation return. Missing a deadline in this case is actually something that is not going to take you under. And in the case of missing the deadline for S-Corp, one of the reasonable explanations that the IRS will accept is, I didn't know I was supposed to file that. Okay? This is the only time they will accept that. They will not accept that with an audit. If you say, I didn't know I was supposed to keep that receipt, you going to be paying. But you can say, I didn't know I was supposed to file that form. Now, that doesn't mean that you won't get the penalties and fees for not filing your employment taxes quarterly and all that good stuff, but it does mean that they will accept it for the date that you want to elect that status. Big old boom right there for you. So right now, in the beginning of the year, I want you to start thinking about how you are treating your accounting. Do you know what's come in so far? You've only had a couple months in a year. Can you tell me what your gross income is? Do you know what your expenses are? Are you keeping track of anything? If the answer is no, pump your brakes on that S-Corp election. Let's slow it down a little bit. If you're saying you're getting there and you are being more active, you're taking a look at your income and expenses and bills and assets on at least the monthly basis, let's talk about it. That's the first criteria. The second is after you take on all of your expenses, and I'm talking about everything. I'm talking about, you deducted all types of stuff, right? After we look at that bottom line number, your net income for the year, will it be more than $45,000? If your answer is yes, let's talk. It is time. You are killing yourself with the amount of self-employment tax, and it's time to switch over. It's just that simple. We don't have to make this a board of directors. I've had a lot of people say, well, if it's a corporation, do I have to put together this board of directors? No, this election is allowing you to act as a corporation, meaning that you can be the only shareholder of that S-Corp. Another great benefit. But you are saying that as a shareholder, you can take owner's compensations, but you are also paying yourself a reasonable salary, which leads me to my next understanding business point. A reasonable compensation or a reasonable salary is based on research. It's not based on what you think you want to pay yourself. And it's definitely not based on, I want to pay the least amount in employment taxes, so I'm going to pay myself the least amount in a W-2 wage. Let's do some research. This can be some quick research. We can take a look at, Indeed.com or some other payment forms of payroll type of websites. And we just want to look at what the national average and the average in your region, because it might be different, cost of living. What that average income for someone in your line of work is. Now, for me, I own an accounting firm. I can have a reasonable compensation as the accountant. I can have a reasonable compensation as the hiring manager. I can have a reasonable compensation as the content creator and marketing manager. If I'm telling the IRS I do all these jobs and I pay myself $30,000 out of the gross of $500,000, just know your tax BFF is in handcuffs going to jail. So I don't want to be there and I don't want you there. Have that information. We are documenting everything. We want to make sure that if the IRS come after us, they know what a reasonable compensation is for someone in your role. Now, for instance, my, e-commerce people got all of these boutiques. Some of you are shopping the clothes, putting them up there, modeling the clothes, doing everything for them. Some of you just had the capital to get it started. Your homegirl is doing all the uploading and you guys are splitting the pros. You have very different reasonable compensations. Now, before you start researching and seeing what the lowest amount you can pay yourself is, I also want to note that the IRS understands that if you made all this money in your business, you probably made some money as an individual. Meaning that if they take that net profit after all of your expenses, even after your W-2 wages, if your income, you as the sole owner of this S corporation, is less than 30%, you in trouble. Okay? Don't do it. Don't do it. I don't care what your research shows. If your research shows that, an accountant makes $56,000 and your company made over $1 million and you try to pay employment taxes on $56,000. Okay. I mean, look, I don't know what you want to do, Wesley Snipes, but I'm telling you, don't do that. 30% should be a general rule of thumb of how much you should be paying yourself off of the net profit of that business. I digress. Now, hiring. I believe that as business owners, and especially as bosses, you have employees. Some of y'all are like, oh man, it's only me. I'm saying you're not a boss, okay? I'm saying that you are a worker, you are a hustler, and you are putting a cap to your max income. Your income is held to the level of productivity of only you if you do not have any employees. And I'm talking about the people who got contractors and all of that as well. Because those contractors, pay some employment taxes. So we've talked about the difference of 1099 and W-2 workers. And I'm telling you, my personal opinion is that you're not a boss unless you got some employees. But I want to talk about the tax implications. The number one reason that most people keep people at 1099 is because they don't want to pay the employment taxes. They don't want to have to figure out how much to withhold and what the exemptions mean. They don't want to pay a payroll software or any of that type of stuff. And I get all of that. I do. However, it's a cost of business. As a corporation, not an LLC, but as a corporation, all of those wages and their employment taxes, as well as your wages and your employment taxes, are deductible from your revenue before you pay additional taxes on it. If you're trying to have the best and the brightest and have someone that you want to stay with your company for a while, you got to pay them. You got to pay them, and you want to make sure that at the end of the year, they not getting their 1099 from your company and thinking that you're a burden. The taxes are already out. They're filing their taxes. It's easy breezy. You are implementing employee benefits programs, healthcare and IRA contributions, maybe a little dependent care expense. All of those things are deductible. They are also essential to keeping the best and the brightest with you. So pay those employment taxes. A lot of you got hit hard during the PPP time, right? When everybody was getting 150, and they got all of that forgiven because they had employees that they were paying. So now some of y'all are like, oh, I know I got to have me an employee because what if PPP come back, right? Well, I'm glad that happened to you because now you know the importance of that running a business. I mean, the business taxes is just a part of running that business. So when you're hiring, right now you have a number in your head of what you can your total expense of payroll should be, right? I got extra $40,000 that I can pay somebody. I'm gonna try to split that between two people and let me see what that's like. Back it on up. Make sure that you have the employment taxes for that person in, that unemployment insurance for those people that you hire, and you have room for growth. One of the things that a lot of people don't know is that if you are claiming to have full-time employees, especially Michigan, guys, there are thresholds to the amount of money that you can pay them. Now, we know minimum wage, but what you don't know is that if you say that somebody pay is working 40 hours, there is a minimum weekly payment that they should be receiving that is typically a tad more than what minimum wage is. Check your state's website for what those thresholds are. W-2 employees cannot make the same smaller wages as your 1099. Again, if you want the best and the brightest, you're going to make sure that they make that money, because that's how you keep people motivated. You don't need someone who got to work 2-3 jobs just to put food on the table. So I digress. Hiring is a big expense, but it can be the difference maker. You want to make sure that the employment taxes and everything else that comes with hiring is going to give you less of an expense than what your return on investment is. So adding this person is going to add how much more income or revenue for your business. That's what I want you to take a look at. So if you were to clone yourself or clone a little bit of yourself, what would that income look like? Is it an extra 100,000 or just an extra 5? And is that extra 5,000 more than the amount of employment taxes and everything else that you're going to have to pay for that employee? If it is, number one, you're not ready to hire. And number two, you might want to just consider contractors. Business explained. We talked about missing deadlines. For corporations, March 15th is around the corner. Every single month after March 15th that you do not submit that corporation return, there's a $210 penalty. I mean, $210 if you say, man, that ain't nothing, because, well, they don't stop because we went to another year. They keep going. And then if you had pros from that business and you end up owing, you also accrue that interest and penalties as well. Don't miss the deadline. If you already know right now you don't got none of your stuff together and you know it's impossible to meet that deadline, you do want to make sure that you're filing an extension. That extension eliminates that $210 penalty for late filing. It does not, however, eliminate any interest and penalties on what you may owe. Just telling you. Now, after you file that corporate return March 15th, you add that Schedule K1 to your individual tax return by April 15th or the 18th this year. You then start the clock of interest and penalties on whatever you owe. So, March 15th, do your corporate return and do your personal taxes so that you know what your total tax liability is and you can start paying on it right now. Do not go in the hole. I am against paying tax debt for more than 12 months. Don't do it. Number one, the IRS compounds daily interest, meaning they look at your balance every single day and add a little something on it. No, don't do it. Yeah, it might not affect your credit, but it may affect your mortgage if you're trying to buy a house. They do look at your tax debt. And a lot of times when you're trying to show more income to qualify for that mortgage, you are increasing your tax liability. And I know I just switched gears on y'all. I'm sorry, but I had to say this. You then have to make sure that that tax bill is paid. Okay? So let's just make sure that we're taking a look at our taxes quarterly. That leads me to my next part of understanding business taxes. There are two very important quarterly taxes, actually 3 for my product-based businesses. All 3 are separate. All 3 you will be paying money for, but all 3 go together. Your gross income. You take your gross income, whatever that is, especially in the product-based business, and you submit the sales tax return. That sales tax is what you're supposed to be charging the consumer anyway. So you're really just the middleman. You're just taking the money from the consumer and giving it to the state in which you produce that product. Or you are taking that as a cost of business. If you are not paying sales tax, it's coming out of your pocket. So if you charge $20 for that t-shirt, just know that is $20 minus the amount of sales tax that is on that product. Just like shipping. Shipping, if you are eating that cost, that should be a part of your pricing structure. Don't do it. Have your consumer pay it. Everybody is used to paying sales tax. We pay sales tax everywhere for everything. Put sales tax on there. If you're using some e-commerce site like Shopify or even Wix, they make it so simple, but they do make it very complicated on where you should be submitting that sales tax to. Wherever your business is and whatever you're producing that product, those people, no matter where they come from in the world, should be paying sales tax for that state. There are thresholds of the amount of product that you sell in certain states that you may have to pay sales tax in their state too, but it is very, very high. And if you are there, I'm hoping that you're working with an accountant and you kind of got that under wraps. Anybody else, making less than 100,000 or even 200,000 in product sales, you want to make sure that whatever state that you are currently in, that's where you are accepting that sales tax, and you are sending sales tax returns and that payment in quarterly. Employment taxes. If you are an employee of that business, right, or you have employees, you are supposed to be submitting on at least a quarterly basis. If your employment taxes with that 15.3% is more than $2,500 in the state of Michigan, you are supposed to be submitting your payroll taxes monthly. Just hit you with a little hi-ya right there. It depends on the amount of taxes and the amount of gross wages that you are making or paying each month and each quarter to determine where you're going to fall in that line. You have to pay that. Now, your estimated taxes that you submit quarterly. This is after you pay all of that, you can deduct those taxes and those payments and those wages from your gross revenue to give you your bottom line number. That bottom line number will let us know what tax bracket you're in, where you will fall, how much to pay in taxes. That is the number we want to be contributing to the IRS as well as the state agency that you are in. Okay, a lot of taxes. I know you're like, oh my God, I got to pay all these places. Yes, you do. But you do get to deduct those payments before you make your final estimated tax payment to the IRS, especially. Understanding business taxes. You do have taxes. If you are making money, if you are a profitable business, you have taxes that you must be paying. It's March. Quarterly taxes for first quarter are coming up. Get prepared. Now, another thing, going back to the corporations conversation, many people have asked me about a board of directors, about multiple shareholders, and a couple things you need to know about that. Partnerships. You pretty much fall in line with a multiple shareholder corporation. So a lot of the things that you would do would be the same as if you had 10, 20 shareholders. Those percentages of ownership are very, very important for generating those Schedule K-1s that goes on everybody's personal taxes. So if you own a business with multiple people, even if it's just one other person, March 15th is your deadline, and those taxes will provide a Schedule K-1, which is just going to be like any other W-2 or 1099 that you have that you will give to your tax person to put on your personal taxes. I digress. Now, if you are the only shareholder, especially of an S-Corp, you want to make sure that you are absolutely taking a W-2 wage out of that business. It is one of the ways that you stay compliant with that election. And when I talk about compliance with that election, I'm telling you that because the IRS already knows that you're saving on taxes. This is a privilege in their eyes. Don't abuse it. Don't get caught up with them saying, hey, what's up? Where's your W-2? And them making you pay a W-2 employment tax on all of the money. So 30% again is about how much you want to make sure that you're paying yourself on a W-2 wage out of the net profit. And if the business is going under, right? Your expenses are exceeding your revenue, or your expenses, only leave this much revenue, it makes sense that maybe you didn't take a W-2 wage that particular year. But if you made any money in that business and you're taking this S-Corp election, you want to make sure you are absolutely filing employment taxes at least quarterly. So we talked about a ton of stuff, everything I said. I want to leave with this very, very important, probably the most important thing I've said all day. Document everything. Every receipt, everything that's on your business bank account statement, everything that's on your business credit card statement. You want to make sure that in the event of an audit and the IRS says, well, what was this $2,000 payment? You want to already have a note on there that you met with this particular brand about this for this long to talk about this, and it generated this much revenue. I want you to document stuff like that, because not only are we painting the numbers picture to them with your tax return, you have to fill in the blanks with your explanation. So business travel, why did you have to stay for 5 to 7 days? Make it make sense. Business meals, who did you meet with? What did you guys talk about? Business miles, where did you go in addition to where you go every single day? So if you go to the office every single day, you're just commuting, okay? But if you go to different locations, if you're going to meet with a client, if you're going to the post office to drop something off, those are business miles. Make sure we are documenting everything. So that is Business Taxes 101. I hope I answered a lot of your questions. I see a couple things. Need to make an appointment with me? Let's do it. Go to taxteamservices.com/bookappt. It will take you to my site. If you do a request a callback, you will get my assistant. You will not get me. I do all of the tax consultations and business consultations. I definitely want to jump on with you. Let's talk through what's going on. And it's the beginning of the year. Let's plot out how to make sure that we're taking advantage of all tax strategies and understanding business deductions now so we implement them throughout the year. I think I saw something else on here. Let's see. As if I'm a hobbyist wanting to be a sole proprietor, do I still need to file quarterly if I am just getting started and not sure how much I will make? This is an excellent question that I'm going to screenshot because it's probably worth making another video for. Let's see. So, if you are a hobbyist, you know that you are not trying to generate any money. You just like doing something. You better make sure you keep that to yourself if this goes on your tax return. Number one. But what we want to do is nobody knows how much they're going to make in business when they're getting started. Nobody knows. They know the market cap. They know the market potential. You do your research. You make projections. You set your price. You understand what it's going to take to get a certain number of clients so that you can reach your ultimate goals, but you have no clue how much you're going to make in business. The moment you start to research, pay for a coach, take any courses or webinars, buy any books, buy any materials for this business is the moment I want to see it on your tax return. I hope that's what I want to see. If you are creating something, or, when I think of hobbies, I'm always thinking about like crafting and DIY type of stuff. If you're doing something like that and you're giving it away for free, we want to make sure that we're documenting that these are potential people to advertise for you, right? Everybody in the startup business has given away a t-shirt or given away a service or severely discounted their service in order to get their first client. That's what you're doing. You're making something, or you're creating something, or doing something that you're passionate about, and you're giving it away for free as advertising for your business. Now, filing quarterly is only on profit. If you are not making any money in that business, you don't have anything to pay taxes on. So the moment that you start to make money in your business, I suggest let's figure it out. Let's figure it out together. Especially if you're not making any money in this business, I want to know what other income do you have that's keeping you afloat. If it's a W-2 income, let's take a look at what the W-2 income looks like with this additional business income. Is that something that we need to pay taxes on? Most likely, yes. Or are you still investing so much into the business that the little money that you made in the beginning stages of your business actually still have you claiming a loss? Those are the things that we want to look at. If you have not made a dime in that business, but you have invested money, time, resources in that business, and we want to get it started, a general rule of thumb is we can write off up to $5,000 in startup costs. This could be hugely beneficial to your tax return overall in the event that you do have W-2 income to support that loss. So, hobbyists, passion projects, all of that stuff, if you generate any money from it, the IRS has already got their hand out. They don't care that, no, I'm not really trying to go into business for myself. I just made a couple dollars on the side. So you want to make sure that if you got a 1099 or you're making any type of money on the side, you act like a business. You are a business. You might not be a boss yet, but you are a business. So take advantage of those deductions and also make sure that you are paying any quarterly or estimated taxes for any profits that you make. Let me see. Oh, somebody said, drop that knowledge. Somebody said, you bomb. All right. Okay, I'm just making sure I don't have any. Oh, we got some DC. So, hey, the DMV area, I don't know how I'm blowing up out there and in Atlanta, but I'm loving it. I am meeting so many business owners and connecting on so many levels. I can't wait to write off this travel on my taxes because I'm going to be all up over there. Okay. So I got you. You're out in DC. Let's connect. I do a ton of Zoom calls. And like I said, I'm looking for some business travel. So let's definitely get on my schedule. The link is in my bio, but I'll give it to you one more time. It is taxteamservices.com/book APPT. Tax and business consultations. I do them all day, and I have one in about 6 minutes. So I want to digress right there. Understanding business taxes is one of the things that can save you tens of thousands of dollars. It is not something that you can skate through thinking that you'll figure it out as you go. You can figure out your marketing as you go. You can figure out how to perfect your content creation as you go. You can even figure out your proven process for your service or the perfect formula for your product as you are making money. What you cannot afford to figure out as you go is your accounting and your tax liability. I do not want you to come to me at the end of the year after I've made all these videos and tell me you didn't know. I am giving you all of the knowledge and I am here to discuss it in detail. Definitely book a business consultation if you just kind of want to figure some things out. I do have a coaching program where we go through everything from business credit to business taxes and organization of your accounting. I'm a budget person, and budgets to me do not mean take something away. It means to a lot in percentage of your income. So budgeting, organizing, reducing tax liability, and definitely growing over time are the things that we talk about in my coaching program. But I hope that this video was everything you needed. It's a ton of questions that have been coming through this year, and I wanted to just kind of give you some tidbits on understanding business taxes. I'll post it on my page and I'll get it on YouTube at some point too, but definitely book a consultation with me. Let's talk and let's get everybody to pay the least amount of taxes and maximize their revenue. Alrighty, have a great day, everybody.